Investing in your 30s. Welcome, guys. This is part of a 4-part series. The first part I released last week called Investing in Your 20s. This one we're talking about today is investing in your 30s, how to go about doing it. We're going to talk about the general situation you're in and your options as far as investing when you're 30 years old. Then next week I'll release a video called Investing in Your 40s, and the following week Investing in Your 50s and beyond, guys. Part of a 4-part series. So definitely will want to check out all these videos that are in this series because I think they'll all be beneficial to all you guys at some point in time, guys. So I hope you enjoy this today. Hit a thumbs up if you do. Let's get into this. So we're talking about 30 years old, okay? We're talking about all of these things are kind of general as far as the situation goes, okay? So when I'm talking about investing in your 20s, investing in your 30s, investing in your 40s, 50s, and beyond, I'm going to talk generally about most people's situation because that's what we have to go off of. Most people, what type of situation are they in? Maybe you're an outlier, maybe you're a little different than other people, that's fine, but this is for general people as far as their situation goes, okay? So the first thing is with your situation, money-wise, is it's like, whoa, your expenses go up dramatically in your 30s compared to your 20s. And here's why. When you're 25 years old and you live in, I don't know, a 1-bedroom apartment, a studio, whatever, no one is judging you, nor are you usually judging yourself if you're 25 years old. However, when you are 35 years old, you live in a 1-bedroom, you live in a studio, everybody just about is judging you, and usually you are judging yourself. Like you feel like, dude, I'm a loser, or like I got no money, or this or that. Okay, so generally speaking, your living expenses, what you expect out of yourself to have for a lifestyle goes dramatically up, and what everybody else expects your lifestyle to go dramatically up, right? So there's a huge difference in expenses. I mean, when you're 22 years old, and if you're driving, a 1992 Honda Accord or a Honda Civic or whatever, and the car's all beat up, and it looks like it just got out of Afghanistan in the middle of a war or something. If you're doing that, like no one's judging you at 22 years old. However, when you're 32 years old, a whole different ballgame. People start feeling bad for you, like, wow, I feel bad for that guy. And you usually feel bad for yourself, like, what am I doing in this $500 car that I might be lucky to get $400 if I actually sold it? So your living expenses go up. You just expect more out of yourself than when you're in your 20s. Everyone, society in general, expects more out of you. So generally speaking, like people in their 30s, their expenses go way, way up dramatically. However, generally speaking, their earnings also go up dramatically. They finally get usually good jobs, and you have a ton of energy still when you're in your 30s, a ton of energy. So although you may not make the most per hour on an hourly basis, if you were to calculate your wages of any age group, right? You have tons of energy, so you go out there and you are a go-getter and you have all this energy to expend, which makes you money. So it doesn't mean you make $1 million a year or something like that, but you have a lot of energy. So people generally work the hardest they'll ever work actually in their 30s. It's not actually their 20s. 20s, a lot of the 20-year-old group can just kind of lollygag and just kind of do some things. Some people bust their butt, but a lot of people in their 20s just don't. It's 30s, and all of a sudden you get that ambition. Part of the reason goes back to the whoa, because a lot of people, what happens? They get in relationships, they get married, they have kids. This forces up the lifestyle a great deal. I mean, like we talked about with the 1-bedroom deal. That's fine when you're a single guy. You got a couple kids, all of a sudden that's not cool. That's not good anymore, right? I live in a 3-bedroom right now. This next month, we're going to move to a 5-bedroom house because I have 2 kids now, and a 3-bedroom just doesn't cut it anymore. So we're moving to a 5-bedroom next month, guys. That's a lot more expensive for me. That's a lot more expensive. However, and we talked about the energy part. A lot of times when you get married and you have kids and those kinds of things, what it can do to you is it can give you that push that you maybe didn't have before. Because when you're playing by yourself, it's kind of like, you can be more lackadaisical, you can be more chill, and it's like, it's not that big of a rush to do anything. When you have kids, it kind of is like, oh man, they're counting on me. It's not just me counting on myself, it's they're counting on me, so I need to amp up my game, and that can help force your energy levels up, which then can make you more of a go-getter and those kinds of things, guys. It's amazing how good kids can be in that respect, and how good a relationship can be, because a lot of times that forces you to play at your A level when maybe you were just okay with a C+ or a B-, guys. I used to be before I was in a relationship, before I had kids, I was still a very hard worker compared to most people. However, compared to now, It's a joke. I was a joke. I would destroy my old self as far as work ethic goes, guys. My energy levels is 50 times harder. The more I want things now is like, it's not even close. It's not even close, guys. So that is generally what's happening. And so a lot of the times when you're in your 30s, it's all about balance. How do you balance those energy levels? How much time are you spending on making money, doing those kinds of things? How much time are you spending on family time? If you have a family, which if you're in your 30s, you probably have gotten to that point. How do you balance it? It becomes a balancing act at that point, guys. So let's talk about your options as far as investing goes in your 30s, okay? So real estate becomes much more of a realistic option for you as a real estate investor than when you were in your 20s. We talked about when you're in your 20s, it's hard to have credibility because you're in your 20s, right? And maybe you haven't done it before. Maybe you haven't flipped that property properly. Maybe you've never done that before and you know stuff, but you just haven't proven it. And so people are like skeptical, like, I'm not sure. When you're in your 30s, it's much easier. It's just much easier. And getting a loan, a lot easier on something like that, like an investment property, much easier to get a loan on that because generally speaking, you've built up credit in your 20s, so now you have a much better credit rating than when you built up your credit through your 20s, which then makes you have a much better credit rating when you are in your 30s, so a loan becomes much more easy to get. And then also, if you're trying to raise funds from investors, a lot of people just take people that are older, more serious than people who are younger. Maybe it's wrong, maybe it's right, who knows? I just know that's a fact. Like people would much rather give money to a 45-year-old than a 25-year-old if they had the exact same everything, right? They had the exact same skill set, exact same everything across the board. People would still give more money to the 45-year-old than the 25-year-old just because they feel like, oh, maybe he knows more or something like that, guys. So real estate becomes a much bigger option for you. And because you have so much energy, you're really amped up. Guess what? You can flip properties and do things like that because one, you probably have the knowledge to do it now. And the second thing is you have the drive to actually go out there and do it, guys. So flipping properties, getting rental income, things like that becomes much more of a realistic thing in your 30s than in your 20s. Stocks can be a very good thing in your 30s. Generally speaking, even if you weren't focusing on it too much in your 20s, you've still, unless you had your head in the clouds your whole 20s, right? You've still been able to see trends go by. You've still been able to hear general things about, remember when Apple was on the come up, and remember when, Facebook was coming up, and remember when this happened and that happened. You'll still know general things which will help you understand future trends in the future, which will help you in your 30s dramatically, guys. So even if you weren't taking it super serious, which I hope all you guys were, the younger you start, the better. You'll still have some general knowledge of what's going on out there, and you'll remember, hey, I remember this is how this recession happened. It was like this and this and this. Maybe that's going to happen again. You'll just kind of have a feel for these kinds of things, right? And another investing thing is your own business becomes much more realistic to start a business when you're in your 30s. Reason being is because a lot of people want to start businesses that are kind of expensive to start. Let's be completely honest. I mean, my business wasn't that dramatically expensive to start. My real estate marketing company, it cost at like $5,000 or $6,000. It was not that expensive to start in the general theme of things. However, a lot of people out there, they want to start businesses that cost $10,000, $20,000, $50,000, $100,000. It's hard to just have that kind of money in your 20s unless you had a great job and you were really super focused in your 20s. Maybe you got that kind of money. However, most people in their 20s don't. However, in your 30s, it's much more realistic because you probably had been saving, you've probably been doing some things, investing already, and you probably got a good chunk of change on the side. So starting your own business, if you want, whether it's a side business or full-time business, becomes much more realistic for most people if it's a business model that is really capital intensive. And also, if let's say you want to get a loan to start your business, some people like to start businesses on loans. I don't believe in that. However, if you do that, fine, okay? In your 30s, a much better chance of you getting that loan than in your 20s. If you go into a bank at 23 years old and you ask for a $50,000 loan, I'm going to be honest, they're probably not going to give it to you. When you're 33 and you've built up credit and you've done things and you've got some money behind you and those kinds of things, there's a much higher chance that they will give you that $50,000 loan to start that business. It's dramatic, guys. So, investing in your own business, whether it's a side business to start up or a full-time business, if it's capital intensive, it's a great chance of you doing that. However, just because I said that, I feel like there's some people that will kind of like use that as a cop-out, like that are in their 20s and like, oh, I can't get a business loan right now or something. Like, don't use that as a cop-out. Like, find a way to still get it done. And maybe you can't start that business that's 50,000 right now, but maybe you could start a business that's 2,000. Don't use that as a cop-out. Okay, so let's talk about how you want to invest. Now we talked about the situation, we talked about your options. How do you want to go about doing it? Well, first and foremost, you want to have at least 10 to 15% of your net worth in cash. Doesn't mean it has to be in physical cash. It can be in savings accounts, checking accounts, something where you could pull that money out tomorrow, and something where there's not a return on the other side. So say, a stock is a bad thing to have, liquidity in because, well, you can get the money generally quick. However, the issue with stocks is, what happens if your stock's down 20%? Oh, you put 100K in a stock and it's down 20%, and now you got 80K worth. Who wants to sell that, especially if you feel like it's a good investment, guys? So, you want to have 10 to 15% of your cash, your net worth in cash. That's something I already do, even though I'm not in my 30s. It's because I got kids. You got things going on. You got more in the game at that point, guys. So you want to keep a lot of cash on you, okay? And aggressive, not stupid. That's the same exact thing I put for in your 20s, and that's the same exact approach. The only difference is, in your 20s, you don't need to have 10 to 15% of your net worth in cash. You can just have an emergency fund, which I always, tell people to get. Make sure you have an emergency fund that can, pay your bills for a month or two, or maybe 3 months. Always have that in your 20s, but you don't need to have that much money of your net worth in cash in your 30s, in your 20s. But in your 30s, absolutely. But you still want to be aggressive, not stupid. You can take some aggressive bets. You're in your 30s, you're super young. If you're watching this and you're 30 years old, the people in your age group are going to live to be 90, 100, 110 years old on average, guys. We see the way, ages keep going up. And then just artificial intelligence is just really coming around, guys. Artificial intelligence is going to be a game changer for healthcare, an absolute game changer. So when you're 30 years old, man, you still got such a long way to play. You still got such a long game ahead of you that you can afford to be aggressive. It used to be like, oh man, you can't be very aggressive once you hit your 30s or whatever. Now it's like, dude, you got such a long way to go if you're gonna live a normal person life. Like, you got a long way to go. So go aggressive, go be a go-getter and kind of things, but don't be stupid. Don't take stupid risks, don't play around with penny stocks. Don't, put all your money in one stock or something like that. Like, don't do that. Don't, put everything into that business you're starting. Don't put every last dime into it. Make sure you're making calculated risk. But make sure you're being aggressive. You want to go get that money, unless if you're a content person. If you're a content person, just stick the money in an index fund or something like that. Mutual fund, which I don't even know why you're watching this channel if you're... This isn't the right channel for anybody that's in that group. We're go-getters here. We want the best. We want to work hard. We want to do all those kinds of things. But at the same time, if you're not a go-getter, like that, then just put your money in an index fund or something like that, and that's fine. But still, even if you have your money in an index fund or mutual fund, still make sure that 10 to 15% is in cash all the time, guys. I don't care, no matter what. So I hope you guys absolutely enjoyed this today. This is investing in your 30s. Next week, I'll have investing in your 40s coming out, so make sure you check out that. Thank you for watching, guys, and have a great day.